It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey there, everybody. It's Tyrone Jackson, the wealthy investor of thewealthyinvestor.net. So happy that you have joined me. We've gotten through the election here in the United States of America, and apparently we have a new president-elect. Now, I can't tell you how many emails I received. What's going to happen to the market when we get a new president? What's going to happen to the market after the new president is elected? What's going to happen? So let me put this to bed once and for all. Markets are focused more on revenue than policy. Markets are always focused more on revenue, meaning how many of those Dow components have increased revenue? Will they continue to take in more and more money each and every quarter? Who the president is less relevant to the stock market. And what is more relevant is your favorite stock and your favorite company that you own shares in going higher in terms of revenue. Now, let me put this out there right at the beginning. I am not here as the wealthy investor to be political. I understand that democracy was on the ballot, that this is a significant electoral period for things like women's reproductive rights and a whole host of other issues, including the border. Those are political issues. I am here to keep that money, that income, that wealth in your account constantly growing, no matter who is in the White House. I'm not ignoring the significance of those issues. I am here if you are earning and you're in the Wealthy Investor Program and you're earning anywhere between $2,500 or $25,000 a month. My job is to keep that going. Do I have feelings, thoughts, and preferences about who I'd like to see in the White House? Yes, but that is not the role that I play as a wealth coach and financial advisor. So I try to keep that private, and I try to tell you where the money is and where the money will be in the next 4 years if we still have elections in the next 4 years. I know a lot of people haven't thought that far, but we may come to a point where we don't have a Republican Party, a Democratic Party, and we might even skip over elections to 8 or 10-year cycles. It all depends on what the president-elect, who'd rather be a king, decides he wants to grab for. So the next 4 years will be very, very significant as to how we proceed in our democracy. With that said, I can make another prediction rather boldly. The stock market is going sharply higher sooner rather than later. So if you're listening to episode 248 of the Wealthy Investor Podcast, guess what? You're doing a great thing. And really in this episode, I'm just going to highlight one company that I think will be the biggest winner of it all over the next 4 years. And I'm going to tell you this, it's not going to be an AI stock. Well, it benefits from AI, but you will probably be shocked. So let's back up for a moment and let's talk about the fundamentals of the stock market. What you and I are doing, if we're following the wealthy investor approach, is we're always following top line revenue. Let's talk about this. Top line revenue is like a company's gross income every quarter or annually. The stock market 90% of the time will follow that top line revenue. In other words, that is to say, if your favorite stock is going higher, guess what? They're probably bringing in more and more revenue. Now, there's a political element to it because if you've noticed in your favorite supermarket or your favorite drugstore, there are less people counting the money at the register. Because the retail environment that we're in right now, and I don't care what store it is to have less cash and less people counting that cash because most publicly traded companies want to cut the cost of employees and they want to use automation as much as possible. So quick little story. When I am in the supermarket, I experience a certain amount of resentment. Why? The lines are longer than they've ever been, and there's always someone that says, why don't you use self-checkout? Now, I don't like self-checkout because it puts me to work in the supermarket. You mean I've got to go get a basket of groceries up and down the aisle, and then I'm going to stop in the vegetable aisle, and while I'm in the vegetable aisle, I might as well go ahead and memorize the code for the potatoes, the tomatoes, the green peppers, and the bananas. Why? Because the lines are so long that if I take the self-checkout option, I need to know those codes so that I am not overcharged for fruit and vegetables. That to me is not my job. I am the consumer. I'm supposed to come in, get everything I want, my strawberry Haagen-Dazs ice cream, and then someone else is supposed to know the codes and check me out as quickly and accurately as possible. But in every supermarket that I shop in on every coast, I notice there doesn't seem to be enough workers on the register. It is not by accident, it's by design. Major corporations these days are trying to go cashless, and they want the consumer to pick up more of the work. I don't like that. Why do they want that to happen? Because that saves expenditures on the balance sheet. You cut the workforce, Social Security payment, job security, unions, all of that. You don't have to deal with that. And you can simply do what? Run your business the way that you want and produce higher profit margins to please who? Shareholders. You see, it all comes back to Wall Street. So when you're shopping, even in the Apple store, what are they trying to do? Less employees and higher profits per store. Now, the way that they look at it from a retail point of view, if you've ever been in one of those AT&T stores, for your cell phone, have you ever noticed that most of those stores are small in size? Because they measure their profitability based on the square footage of the store. So if you're just coming into the store to see a service representative and there aren't a lot of options to the store's rent costs AT&T less money. So they actually have a formula that says if our stores are smaller, we pay less rent and our profitability goes higher because we have to please who? The shareholders. This is what makes Apple so unique. They're willing to rent even more space, right, to get in as many customers as possible into, in effect, what is a showroom, so you can play with all their toys and gadgets, right, and make a purchase when you leave the store. So the Apple Store is really interesting because they really like for you to leave with as many cell phones or as much hardware as possible and not order it online. They want you to order it in the store. Okay. Whereas when you look at something like AT&T, they know you're coming in to look at your bill. They frequently upsell you on the bill. I think I could save you $80 on your monthly bill. I'm sorry. Do you have somewhere to go? I love that line. I was in New York and the guy goes, I think I could save you $80 on your bill. Do you have 11 minutes for me to check it out? Well, $80 is pretty substantial, right? So turns out he couldn't save me $80 in the store. So that ploy didn't work. He goes, do you happen to own a business? Yes, I do own a business. Well, could you tell me who you could be in touch with, who I can be in touch with, and we could perhaps save them $80? No, you can't have any more of my contacts. No more of the people who work for me. No more anything. Thank you. I'm out. So the retail environment is shifting constantly. Why? To please Wall Street. Now, here's what we know, that Target has become pretty crafty. When you go into Target, they have more monitors on the wall running their in-store promotions on aisle 23. Turns out the consumer will actually look up at the television, find out where the discount is in store, and rush and buy there. So they're selling you using their in-store promotional network. If you read about the companies whose stock you actually own, they're actually telling you this is how we're boosting sales. They used to call it a forward-looking statement, not so much now. So what is going to happen here in the stock market over the next 4 years? Well, most of your S&P stocks will actually rise because we're all getting more and more comfortable in the digital era buying things online. But one company is going to rise in particular and outperform the market. I think this next stock is going to rise 100% over the next 5 years. And I'm going to go into that detail right after you take a listen to this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
And we're back. What do I think is the number one company in the stock market? You ready? It is going to be Amazon.com. That stock is probably going to double within the next 52 weeks. Now, it's rare during the podcast that I talk about one company and why I like it, et cetera, et cetera. But I want to give you some insight and some things perhaps you haven't considered before. Amazon has essentially taken over all of Hollywood. Do you realize that? Okay, I'll tell you why. Because the more and more the television and movie business relies on streaming, where's all that program? It's on a server. And who's the biggest server in the entire world, or who owns the most server space in the entire world? Amazon AWS. They call it their web services. Well, any major studio, whether you're Paramount, whether you're Warner Brothers, you have to have your content these days on a server. Why? Because Amazon wrote the rules, right? We don't go to theater anymore to consume our entertainment. We have been trained and programmed to consume most of our entertainment via television at home. All of the shows that you will watch this weekend on your favorite streaming service, they're sitting on a server. The amount of space that they take up on the server is enormous. And who's the largest cloud service provider in the world? Basically, it's Amazon.com. So all of Amazon's clients use their cloud services. I'm going to read off some names, and I want you to think about these companies who are all paying Amazon.com or Amazon Web Services to host their entire enterprise. And I think you'll see that Amazon is going to be a $1 trillion company within 5 years. So here are just some of the names of the companies that trust their entire enterprise to Amazon Web Services. There's one company called Berkshire Hathaway. That should sound familiar to you. That's Warren Buffett's company. Comcast, I don't know if you've ever heard of them. Twitch, Lyft, Pinterest, Snap, Salesforce, Volkswagen, Adobe, Facebook. Every time you upload a picture or a video onto Facebook, where's it being stored? Amazon Web Services. Dell, Kellogg's, Ford, Coca-Cola, Johnson & Johnson, anything Sony. Sony is an enormous company, and whose cloud are they sitting on? Amazon Web Services. And finally, these are just a few names because I couldn't name them all. You may recognize some of the names of these companies. Toyota, Expedia, Hess, the oil company, Apple. Did you know Apple's cloud is hosted on Amazon Web Services? And finally, Netflix. Yes, Netflix. All that content that you're watching streaming on Netflix is hosted through what? Amazon AWS. Now let's stop, because Amazon is the largest retailer in the world, right? So what are their revenue streams? There's AWS plus their retail segment, right? Plus their own streaming service, plus, believe it or not, the entire MGM movie catalog is now owned by who? Amazon. Amazon, Amazon, Amazon. Who is running the world? Not Tesla. It is Amazon. But it's very quiet and it's behind the scenes. Now, what I love is all of Amazon's clients, the ones that I've just named, are paying hundreds of millions of dollars to them just to host their entire enterprise. So if Amazon decided to go up 35% on all of its hosting fees of the companies that I've just named you, how many of them are going to switch their hosting to another company like Microsoft? Almost none. Why? The transfer of data alone from one service to another could take months, weeks, or years. All of these companies, I'm sure, have agreed to price increases that are built in for at least the next 2 to 5 years. That price increase is what shows up, can you believe it, on the top line of Amazon every quarter. When that top line is growing, the stock price continues to grow. Giving you an example, at the time of this recording, Amazon was trading around $202 per share. What was the stock 52 weeks ago? $146 per share. What was Amazon trading at on a split-adjusted basis 5 years ago? $87. So what does this all mean? In the last 5 years, the shares have gone from $87 to $202. Now let's see, $87 twice, that'd be 100%, and the shares are at $202. Over 100%. Let me explain to you why this is so significant and why I enjoy you being a part of the Wealthy Investor Program. Because is it possible in the next 4 years that Amazon shares are going from 200 to 400? Yes. And the rich in America will get richer. Now that's exciting for some, depressing for others. Because if you're not in the stock market, you're going to miss the run from 202 to 400. Now let me put this in perspective. If you had $10,000 worth of Amazon shares right now, in about 4 years, you're looking at $20,000. However, if you had $100,000 worth of Amazon stock, in about 4 years, and we know what's supposed to happen in 4 years as it relates to picking up a new president, you can double your money. If you have $1 million worth of Amazon stock and it doubles in the next 4 years, you will have $2 million. Now, here's what's so exciting to me, and this is why I love doing this show. Let's say you don't have any shares and you decide, okay, Tyrone, it's 2025 and I'm finally going to put some money in the stock market and start covered call writing and making that residual income that you talk about so much. Well, if you follow the Wealthy Investor method, you don't have to start out with 100 shares of Amazon. You can start out with 50 shares now, wait for the stock to move up $10, $15, buy some more, then another $10 or $15, buy some more additional shares. We call this in the Wealthy Investor Program, building a position. That means we buy more shares of stock that we're holding for the long term only when it rises $10 or $15. You see, we only buy into stocks that rise. So therefore, we're adding to our winners constantly. Now, here's the best part. Where does the money come from so we can buy more shares? It comes from covered call writing. Yes. Isn't that interesting? If Amazon shares double in the next 4 years, you can start a small position now, let the stock rise, and in 4 years, you'd have a large position. Very interesting. There's a reason Amazon is a member of the Dow Jones Industrial Average and the S&P 500. The company carries a lot of weight. It has relationships with every major retailer in the entire world, and those relationships are going to continue to grow. Most importantly, if all of the clients that I mentioned to you not too long ago accept the increases for AWS Web Services, Amazon's top-line revenue is going to grow. In the next 4 years, it's not hard to believe Amazon will be a $1 trillion company. And best of all, you get to be a part of it. Do you see how this all works together? Your wealth is in your thinking. It's in your belief system, and it's also in the amount of shares that you own in a company like Amazon. So although our country has a lot to deal with when it comes to democracy, tariffs, and rule changes, and politics in our society, the rich over the next 4 years will continue to get richer. It doesn't matter for the wealthy people who is in the White House as long as you are participating in wealth via Wall Street. Amazing, amazing, amazing. When you listen to the show, it's always my goal that you leave a little bit more educated, a little bit more uplifted, and a little bit more excited about your financial future. Because if you stick with me, it's going to be very bright. I'm Tyrone Jackson, The Wealthy Investor. Please visit me at thewealthyinvestor.net. Download all the free information that you can about the stock market and get that financial education. And when you join our list, I'll send you this podcast absolutely free. Brought to you by, of course, Amazon. I'm totally kidding. I'll see you next week right here on the Wealthy Investor Trading Stocks Made Easy podcast.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.